Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex Trading Room on April 26th of 2020. We'll be going through our usual agenda, a look at the prior week's results, our currency strength meter for the past week and past month, fundamental announcements scheduled for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Started with ledgers. Long-term ledger had or long-term account rather had a few trades close in our favor. So we're up about, I'm gonna say, I think we were four something. We're up 6% and change, almost 7% up last week. Again, we don't expect this account to have too much movement. We prefer to keep it with long running trades, but every now and then we will get taken out early on a retracement, which gives us the opportunity to jump back in if we feel so inclined. So last week was a pretty good profit capturing one on this account. The intermediate term account did not fare as well. Again, we're in a very bouncy sideways market. We had a couple of long-running trades closed out again, not a huge shift, but we are down for the year on this account. We see a lot of opportunity in the market for the months to come, so this is very likely a momentary blip, but it is what it is. We do still have multiple trades open, and they are carrying some nice levels of profit, so we'll see what happens with those. We were pretty quiet on this account last week, noticing the sideways market. Again, not the most conducive for good trading. So we didn't open too many trades. The ones that we opened, again, fared rather poorly. But again, small risk and looking for greater gains as some of these trades will eventually move in our favor. The short-term account did decently well. We're up 2.5%, give or take, on the week, so that's not bad at all. 5 trades, 3 of them winners, 2 of them losers. Overall, again, a nice positive balance for the week. Notes and opportunities for improvement. As I mentioned, a very sideways bouncy week with a few signs of life showing up on a few currencies, a few pairs. We'll be keeping an eye on those. As I said, I do see significant opportunity coming into the market as we go through the current events. There was an utter collapse in the oil market. Actually, the futures for month of May went negative for quite a significant period of time. We're going to look at the oil chart very shortly, and we'll see what I mean. You're not going to be seeing negatives in that chart. However, that is the current oil price. It's never going to be negative in real terms. What went negative were the futures. Intermediate term down a few points on older trades. As I mentioned, we're still carrying open profit. Opportunities through end of year promise to be significant for obvious reasons, and that's what we will be targeting, mainly on the long-term and intermediate term accounts. Coronavirus remains the main factor. And as always mentioned, our live event will be rescheduled sometime in 2020 as soon as the current situation shows signs of letting up. Relative strength meter for the past month and past week, we see a significant drop in volatility on the monthly. It's went from 20% to below 10%. The major movers positively were the Australian dollar, the silver and gold commodities. And losers, we had quite a bit of losers. The CAD, the Swiss, the euro, the pound were mainly on the losing side. And yen, kiwi, and dollar didn't do as poorly. No significant movements. Again, it's been very sideways for the last better part of a month. But we have seen a few pairs that have, or a few currencies that have definitely clung to gains. The week that just ended, we saw gold as the main winner, followed by silver, followed by the Aussie, dollar, kiwi, yen. Didn't fare too poorly, and the losers were the Canadian, the Swiss, the euro, and the pound. Volatility was, I think it's remaining pretty stable, clinging to anywhere between 3 to 4%. So that has, again, sideways market. It's been bouncy, but usually the week is ending up not too far from where it started. So again, it's short term, sometimes intermediate, are not going to be too favorable in these markets. Long term, however, seems to be doing quite nicely and picking up the slack from the other two. Fundamental announcements for the week. We've got a pretty busy week, starting tomorrow night with the Bank of Japan's interest rate decision. We have on Wednesday interest rate decision out of the US, as well as the FOMC press conference immediately following. And we have the European Central Bank interest rate happening on Thursday. Friday is the beginning of a new month. It is May 1st. I don't see the non-farm payroll. That may have been pushed out to the following Friday. I'll have to check, but it wasn't on the calendar when I printed this out. Okay, with that, we move into our charts. As I mentioned, oil was the big loser. It dropped well below $5 in the latest move, or actually close to $5 in the latest move last week, before recovering to slightly above $18. A very tough week for oil. I would expect this to reflect in the Canadian dollar at some point. You can see the huge gap that has been created. Again, it can't go much lower. It's going to hit zero. The actual oil price is never going to be negative, though the futures may go negative at any point, as they already did. That was a first time for this as well. So again, a very, very interesting market, or market conditions for the commodities. What else can I say about this? Well, again, we're going to have some pretty good opportunities to trade all of this back to a reasonable level at some point. Moving on to the currencies, Eurodollar had a decidedly bearish week, with recovery being seen only on Friday, and that one didn't break any records there. So we're still in a dollar strength, euro weakness play. I don't know how long that's going to last, but that is what this pair is doing right now. Pound dollar, also a bearish week, with a bit of recovery from the middle of the week onwards, but nowhere near where the week started. So we see dollar strength, even though not a lot, but it was still there for most of the week. USD/JPY was mainly sideways, so we didn't see a breakout in either direction. Looks like the USD/JPY took the week off. USD Canadian, I expect all the Canadian pairs to be moving into Canadian weakness, especially considering the situation with oil. But we haven't seen that reflected in the currency markets as yet. So the CAD actually had not too bad a week against the dollar. It didn't move too much, but it did move into Canadian strength as opposed to weakness. So we'll have to see when, if at all, this is going to start moving in the logical direction. USD Swiss had a bullish week. It went into dollar strength for most of the week again, except for Friday, when it did somewhat of a retrace, but nowhere near where it had started off the week. Aussie dollar, also a reasonably sideways week, though it did start to pick up towards the middle and went into dollar weakness. And the Australian has been showing signs of waking up for quite a while now. So this may be the beginning of a movement towards the top of this chart, and we're already playing it in that direction. We'll have to wait and see if it fulfills, but it's looking like a good opportunity. The Australian dollar has been in a weakness cycle for the better part of 2 years. And as with most other things, there's limits to how far down it can go. And at some point, well, there are cycles. At some point, there will be a recovery. I think this may be a good opportunity to start looking for one. Again, I'm looking for longer term opportunities, and some of these pairs are definitely showing signs of waking up. Kiwi dollar, same thing. I think we're going to be in for a ride back towards the top of this chart at some point. There's anywhere between 500 and 700 pips to be had there, but it has been decidedly sluggish. It looks like most of the market is waiting for the next shoe to drop. Aussie Canadian, this one has already gone quite nicely to the top. This is one of those pairs we traded extensively as it went into this recovery mode. If it does break the top of the chart, there's going to be some huge opportunities on this one as well. And again, I do expect the Canadian to start trending in that direction. This is one of the few Canadian pairs that did go into Canadian weakness for the majority of the week. And we can see it not that far from the top of the chart. Euro Swiss continues to play at that new level of resistance all the way at the bottom. We do have an open trade on this one, and we are carrying a small amount of profit. But definitely the support break is a positive outcome here, and we are looking for it to drop further on the backs of euro weakness and the fact that the Swiss is one of the safe haven currencies across the globe. So this one has every opportunity to give us some nice gains if we see that good movement. Euro pound, we were short on the long-term account and we did get taken out on profit. So this is one of those trades that added to that almost 7% boost for the week that just ended. It looks like it's turning around again and might give us the lower low. So I might be re-entering this trade on the long term. It is still open on the intermediate and also carrying a bit, not a whole lot. We entered a little bit later on Euro Pound, but it is starting to move back in the right direction. Euro JPY, we took some profit on Euro JPY on the short-term account this week as it bounced off of support. That was a good risk trade. When it does hit the bottommost levels of support or topmost levels of resistance, you can count on a few bounces. Even if it does ultimately pierce, it does do a lot of testing, or usually does a lot of testing before that happens. So we took advantage of that on the one account. We'll have to see what the new week brings. I suspect that we're going to have an opportunity to trade this one back up towards resistance before it continues, assuming it does, before it continues its further drop, breaking completely out of the bottom of this chart. Euro Canadian, a very, again, the euro and the CAD are both weakening, though the CAD is not weakening as much as it should. So this one actually went in favor of the CAD for the majority of the week, with only some kind of recovery being seen on Friday. This chart could go in either direction. I think the euro and the CAD are both in for a rough couple of months. My instinct says that the euro is probably going to hold steadier, so we'll see what this happens. There is still quite a nice bit of room to trade this one towards the top, so we'll see what happens. Pound JPY looking like it hit support and is trying to go back to the next level of resistance on this somewhat wide channel. It's got about 400, a little bit under 400 pips. So this might be a pretty good opportunity to take those pips. I think we already have a trade open in that direction on the intermediate. And again, we're looking for just a channel bounce back to the 135.50 or thereabouts. Aussie JPY also reasonably flat for the week, but it did manage to go back to a prior level, prior high. So it's still looking like we might have a breakout towards the top. And again, the Australian has been showing strength of late. So this is another one where I'm keeping an eye on what it's doing to play a breakout if and when it happens. Euro New Zealand, we're opening, or we did open a trade on the long-term account and basically another channel bounce here. So we'll see how that pans out. And that's pretty much all I want to say about that one. Pound Canadian, another one where I would expect the CAD to suffer in weeks or months to come. So we'll be looking for opportunities to trade it up. And last but not least, pound Swiss still bouncing between a very tight, narrow channel or range between the 119 and the 120 and a half. There's about 150 pips in that channel. And as long as it doesn't break out, I'm pretty much ignoring this one. But we will at some point get the breakout, and that will be the tradable event. Setups we see in progress. We've got basically coronavirus across the board. That's not going to change. We are seeing some signs of the market being the economy, businesses and whatnot being reopened in most of the major economies. I think Europe is the only one still extending quarantines and such. There's been protests in the U.S. and many of the state governors have said that they're looking at ways to start relaxing things pretty much now. So by the beginning of next month, we should see some movement there. Japan is not quarantining its major cities, or at least is not doing it in a very strong fashion. They actually have a very low death rate so far. So it's every country is basically doing different things to manage this as they see fit. But I think we're looking at the worst of the pandemic being over. Of course, this is going to change how business is done, how people socialize. It's going to bring a lot of change, which again I can't predict. The only thing I can predict is it's coming. So we'll have to see what the lay of the land looks like after things go back to normal. And I'm doing air quotes here, whatever normal is going to be looking like after we come out of this. So again, for now, the coronavirus is probably the one fundamental you need to take into account, and all the currencies are going to be moving in in that sort of direction based on whatever the news cycle brings us. And that is the end of the presentation. As usual, I like to close out with a bit of a reflection, and today's or this week's is reasonable expectations and risk in the market. And this is based on a communication I had recently with someone. They emailed me out of the blue based on having read my book or one of my replies online to something. And I had to burst their bubble, or I tried at any rate. It never actually happens, unfortunately, until people blow up their accounts, by which time it's usually too late. But this person wanted to know how they could repatriate profits since they live in a country where Forex trading is quasi-legal. And there's quite a few countries out there, Thailand, India, where Forex trading is either completely restricted or you're only allowed to trade certain currencies. And it is probably a jailable offense if they catch you doing it. So I pointed out the obvious. This guy's starting out, or that was the impression, and he's worrying about repatriating profits. Start by making profits. Then you can worry about how to move them back into your country. Or you know what? Every place in the world I've ever been to loves people with money. If you don't like where you're at and you have the money, there's many countries very willing to accept you. So I point them in that direction. You know, if you can move, money rules. I mean, if you actually do have the money, you can figure out how to move yourself to where the money is, or you can figure out how to legally move the money to where you are. It becomes a very easy problem to fix once you have the money to actually pay for it. And he replied saying that it would become an issue because, you know, moving $1 million in 5 years and all that. And it just, the conversation went downhill from there. This is somebody with a, you know, $5,000 account. I did have a further conversation with them. You're not going to turn $5,000 into $1 million in 5 years, no matter how good you are. It just doesn't work that way. There's a 99.999% chance of this guy blowing up, but they're going to go ahead and do it. So I tried to be kind. I gave them as much information as I could. Hopefully they'll pay attention. But again, reasonable expectations and managing risk. That is what is going to make you money. And if your expectations are to turn $5,000 into $1 million inside of 5 years, then you already failed at the one, and you're probably going to be failing at the other. That's it for me for the week. Again, I always try to add this chart here to the end of the presentation. If any of you have any ideas on how I can get word out to people that are not like the person I just mentioned in the prior slide. I know there's a whole lot of people out there that do have reasonable expectations or can be taught to have them, and would appreciate risk control. Send me suggestions or send these people my way. I would be happy to have more of them with us. And that's the end of the presentation for this start of the week. Any comments or questions from anyone? Okay, then thank you very much. And we will be back tomorrow. I'll be sending this out via email as a summary with the recording very shortly. Thank you very much. Have a good one.